Hi everyone, and welcome to Introduction to Accounting. This video shows you how to use general journals and general ledgers as opposed to placing transactions in T accounts. Until this point, we've been placing transactions in T accounts. So for example, we would have an initial transaction of invested $5,000 cash in business. In a T account, I would put $5,000 on the debit side for cash, $5,000 on the credit side for capital. And I would do every single transaction in this method using T accounts. T accounts are a great way to learn how to do debits and credits and how to place transactions in a debit and credit format, but it doesn't really work on the large scale. Reason being is because I don't actually know my individual account balances until the end of the problem, and because if you think about a real business, having tons of different T accounts would be a really inefficient process. So instead, we're going to basically stop doing T accounts at this point because we now have the idea of debits and credits down, and we're going to be using a process called journals and ledgers. So just to recap, we're changing from T accounts to journals and ledgers. This is going to be a more efficient process as it allows us to constantly see the individual account balances. Okay, so the new process will be analyze transactions, journalize the transactions, post to the general ledger, which I'll show you in a second, and then place in a trial balance. And then finally complete financial statements. So we're going to be getting rid of T accounts and getting rid of the idea of footing and balancing. Because we're going to be constantly balancing each individual account, we'll no longer have to foot and balance at the end of the problem. Okay, so instead of doing these T accounts as we see here, we're going to be using a general journal, which is this is a small version of one, and general ledgers, which like the following. A general journal is considered to be the book of original entry. And this is because it shows the end transaction in its entirety, as opposed to having one T account in one piece of the paper and having to find the corresponding entry on another section of that paper. We're going to have the actual entry together in one spot. And this way we can easily see both sides of the transaction. So let's say this $5,000 cash investment took place on January 1st. I would come in and put my date, and then I'm going to show both sides of the transaction. So I have a cash and capital. So I'm going to put my debit account in first, cash, and then right underneath it, capital. And I'm going to actually fix my formatting a little. The debited account is always flush up against the line, and the credited account is indented slightly. For right now, we're going to use this column, the PR column, which it stands for Posting Reference Blank. I have a $5,000 debit here, so I have a $5,000 debit in my journal and a corresponding $5,000 credit. And now I can see this entire transaction in one spot. At the same time, I would then put a small entry under here, such as invested in business. And that way I know what happened. And that's considered to be journalizing. It's just taking the transaction from T account form and putting it in a journal where I can see both accounts together in one spot and the entire debit and credit amounts. The other good thing about the journal is it shows me that both debits and credits equal right there. Now, after you create a journal entry, you then have to do something called post to the ledgers. And these are my ledgers. And ledgers are basically going to be expanded T accounts. If you look right here, this debit and this credit represent my traditional T account found over here. So this represents my cash account or my cash ledger, and it has a date column as well, an item column, which you don't have to use until chapter 3, another PR or posting comment column, which matches the one in my journal, my T account right here, there's two T accounts, one for cash and one for capital, and then a new column called the balance column, which allows me to constantly balance my accounts. So let's post this transaction from the journal to my ledger. Now, all accounts, first of all, have a number. Your assets, if you refer back to earlier in chapter 1, are always in the 100 level, and capital is usually in the 300 level. And again, please refer to chapter 2 in your textbook and it'll go over the idea of account numbers and things like that. So now I'm going to post this transaction. So I have January 1st is the date and a $5,000 debit to cash. So I'm just going to come in, put the date. I'm going to skip the item column. I don't have to put anything in here until chapter 3. I have a $5,000 debit, and that is going to make my account balance $5,000 as well. Now, cash has a account number of 111, so I'm going to come over to this posting reference or PR column and put 111. And let's say that this is general journal. I'm just going to switch this a little. General journal page 1. So right here I would have page 1. Because this is page 1, I would put page 1 under the PR column of my cash account. Now what this allows me to do is it allows me to see that on January 1st I received $5,000 cash, giving me an account balance in cash of $5,000. If I want to see the entire entry, I'm going to look at page 1 of my journal. I turn to page 1 of my journal, and there is that $5,000 debit to cash, and it also again refers me to the cash ledger account. That way, if I ever have any questions regarding the journal entry, I can see where to go. I also know what other account was used in this transaction, in this case capital. So now I'm going to post the capital portion to the capital ledger. So again, I have January 1st as the date and $5,000 that I put in my business. So January 1st. Now I have a credit here, so I have a credit here, giving me a capital balance of $5,000. This is again General Journal page 1, and this account's number 311, so right here I put in 311. Now technically I could do this separate differently. I prefer to do GJ1. Some people just put 1. Some people put G1 or J1. But whatever you do, as long as it's a common theme and you always do it. Now, I also use the PR columns as a way to do like a check figure. Like if I have a list and I'm locking something off on my list. When I put the G-General 1 on here and the 111 or 311 or the account number here, I'm marking off that yes, this transaction has been transferred to the correct account. So let's do it again. I'm going to make a new entry now, and we're only going to look at the cash side just because I don't have enough ledgers. Let's say on January 3rd I purchased supplies. So I'd put in the date, and just think back to your normal transactions, whether it's chapter 1 in that tabular form or in chapter 2 in T accounts. If I purchased $300 worth of supplies, paying cash, what accounts would be used? Well, I now have supplies, so that's a debit, and I've used cash to pay for them, and we're going to say they cost $3,000. I like my little forms to look the same, so I'm going to indent that. Okay, so here I show that, again, I purchased supplies for $300 using cash on January 3rd. I have the date, I have the 2 accounts that are used, and I have the debit and credit amounts. I don't fill out the posting reference column until I've transferred it to the ledgers. So I'm only going to do the cash one for now, but I would put in January 3rd, and I'm going to credit cash for $300. So let's see how the idea of the running balance works. Now I've used $300, so now my cash balance is not $500. 5,000 minus 300 is equal to 4,700. So now that's my new balance in cash. It would basically match your checking account at this point. So I then come here and I'm going to put my general journal 1 again, and I'm going to put 111 right here to show that that's been transferred over. And then I would do this for every single transaction. And again, because I'm using at least 2 accounts for each transaction, it's going to affect at least 2 ledgers here. What this allows me to do is if somebody has a complaint or anything regarding anything, or if I'm confused in the future regarding a balance, I can always look in the ledgers and see what my account balances were at a certain date, and I can refer back to my journal to see if I transferred it over correctly or if I had an error. The great thing about having a running balance column is the fact that it allows me to constantly balance my accounts, as opposed to T-accounts where I had to wait till the end of the problem. So I always know how much money I have in cash or how much supplies I have because I'm constantly balancing. Just like with T-accounts, any account that they give you in the homework, you must have a T-account for. Other things as well as if they tell you individual revenues or individual expenses, you must, I'm going to give myself a little bit more room here, you must have a ledger for each account. This includes expenses, revenues, etc. And what I mean by this is assume we had like a miscellaneous expense account, wage expense, rent expense, insurance expense, whatever. Each individual account would have its own ledger. Another thing is regarding this balance column. Now, if I have 2 debits, I'm going to add them together. If I have 2 credits, I'm also going to add. If I have a debit and a credit, I'm going to subtract. And I'll show you what I mean by this. This transaction right here has a debit in the balance column and a credit on the third in the T account portion. If I have a debit and a credit, I have to subtract. Let's say I'm going to make another entry down here. Okay. And I'm just looking at the cash account right now, but you would do this, oops, for every single account. And I'm going to shift down. Okay. So in this example, I'm going to receive revenue. So let's say on the January 5th, I received revenue of $500 from customers. Okay, so I have a debit of $500. I would debit revenue for $500. Because I have a debit here and a debit here, I would add them together for my balance. And this would work for all accounts, not only cash. And then I would come down here and put my 111. I like to do all my cash entries first, and then I would go do all my capital entries and all my supply entries, and that way I'm constantly just focusing on one ledger at a time. But if you would prefer, you can look at each individual entry and enter them both in the ledgers. It's up to you. All right, after this point, I would take my ending balances in my accounts and complete a trial balance. That's it for this recording. If you have any questions, please let me know. Thank you and have a great day.